All right, welcome in to Roll Tide. Wow, this has given everybody a lot of trouble. And it's amazing how we can complicate the simple, isn't it? But before we talk about this, we talk about the GOAT. Let's talk about Thursday. Thursday's class is going to start at 1 o'clock Central Time. 1 Central Time. It also will have a different Zoom link. So I will send out the flyer that includes the link for Thursday session, and it's a different time. So instead of 12:30 Central, it will be at 1 o'clock Central, and that's when Tom Shoshnoff, as my wife says, will be joining us. The guy has created two separate billion-dollar enterprises, and he's going to talk to us about risk taking. So be great for you guys to be involved with him. It's going to be open up to my trading community as well. So I hope we'll have a big crowd for Tom. Now, also, if you are able, now some people get pissed off about this on the thing. Don't get ticked off. They say, the dude offered extra points for something that I couldn't do. Listen, it's fine. If you attend that session live with Tom Sosnoff on Thursday at 1 Central, you get 10 points for being here. Okay. You get 10 extra points for being there. I got no problem giving you extra points because I really want you to be here and to experience him live, because you'll actually have a chance to ask him questions about business, about risk, about trading, about investing, and get his take on it. He's a really, really, really great speaker. I think you'll really get a kick out of it. So Tom's going to be with us. Now, I will also give you 5 extra points for anybody else that you bring in. Heck, you could do your entire course in this one thing. You bring 20 people in, your family, your friends, your children, your grandmother, whatever. Anyone that's interested in risk, especially in business, it's not just trading, it's not just investments, it's taking risk. Because unfortunately, y'all don't take risk. We brought you up not to take risk. We've always told you not to take risk. That's why people cheat on exams. They don't want to take the risk of, what if I fail? Well, so I'll cheat on the exam. No. Take risk, man. Go for it. Do the things, make mistakes, have failures, because this man has experienced failures as well. So we'll get him to talk about his failures as well. So so after the thing is over, you tell me you were in the class, send me an email. I was in class. My mama was here. My daddy was here. My grandpa was here. My ex-boyfriend was here. Whoever joins us for that session, tell me they're there, and I'll figure up your extra points, or figure it up for me. Say, Bobby, I was there, plus I had 3 others. Send me a message, and we'll give you your extra points. You will also get 10 extra points for emailing Tom Shoshnoff. I will give you his email afterwards, thanking him for joining our class. I just think that's good etiquette, and he likes hearing from students, and don't just say, thanks for joining us, maybe mention a very short email, thanks for joining us. I really enjoyed when you spoke about X. You get an extra 10 extra points. So I love throwing out extra points, and this is, you can get a lot of extra points here. So any questions about that? Nick, you got any questions about that? You're good to go. All right, Nick is good. All right.
I had a question.
Yes, Katie.
I'm sorry. Is it a 30-minute or an hour?
It's going to be probably about an hour.
Okay, thanks.
Yeah, it's going to be about an hour. And so if you got questions for him, whatever, ask him. And the one question that may be interesting is, Tom is a big proponent of active investing, active trading, being over your own account rather than passive. So what we've been talking about a lot with the J.L. Collins book is passive investments. Does he feel that active is good for mama and papa? Does he feel like it's people that are not interested should be interested? I mean, it's just those kind of questions. Where does he see the industry going? It'll just be great insight from Tom. All right, Katie. A man buys a goat for $60. I'm a goat farmer, by the way. I got 3 of them out there.
I hate this goat.
You hate this goat?
I hate this goat.
Now, he buys a goat for $60. Then he sells it for $70. Then he buys it back for $80. He sells it again for $90. How much did old man make? All right, Katie, let me hear your rationale.
I'm seeing this two different ways. So if in total,
Mhm.
we're looking at this whole thing collectively, $10, because he had a loss in the middle of it. But if we're looking at how much did he make each time, then 20. I see it both ways. Glass
Okay,
half full, glass half empty.
okay. So are you saying you've got two answers or you have one answer?
Two.
Okay, you got two
In
answers.
my response, I posted $10.
Okay, $10. $10 and you're sticking with it. Does anyone disagree with Katie? Does anybody agree with Katie?
I think the reason I agreed is specifically the word it. He buys it back. And since we're talking about a goat that is a physical goat versus something like a stock,
Mhm.
then I'm going with $10. If it was stock, and that was what I put in my response. If this was stock, it'd be 20, but it's a goat. And it's not like he's buying back another goat. He's buying it back. It's the same goat.
Okay. All right. So you say if a man buys stock for $60 and sells it for 70, he's made $10. We'll all agree he's made $10 there, right? Then you buy it back for 80. So that's where you're kind of saying, hey, wait a minute. You know, if we line up the debits and we line up the credits here, we're buying it back for 80. So debit and credit wise, I guess that's why y'all are coming up with the 10. It's kind of, I think more people actually came up with 10 than 20, but he sells it again for $90. How much did he make? Okay. So I got to go $60. I sell it for 70. I made $10. All right. At that point, what is my basis in the goat? Remember, basis is you know what you had. I mean, after the goat is gone, do you have a basis in the goat? Hey, there's Shannon. Shannon, talk to us about it. Tell us about the goat problem here. Let me hear your rationale.
Oh my goodness, the rationale. I don't know why we're buying goats
Okay.
to start with, but
What would you rather buy? Let's change it to something you'd rather buy.
I mean, how about an otter?
Okay, we're
That's
buying an
random.
otter. Okay, we're buying
Yeah,
an
we're buying an
otter
otter.
for $60. Then you sell it for $70. You would agree you made $10 there, right?
Right, I got $10.
Okay. Now keep going through your logic. Let's see what you say.
All right, and then I feel bad and I want my otter back, so I buy it for $80.
Mm-hmm.
And the otter bit me, so now I have to sell it again. And I came up with, I think it was, oh gosh, now let me do the math. We made $20 total.
Made $20 total. Okay, Katie's going
Yeah.
with 10. Okay. Here's the way I look at it. I buy the otter for $60. My basis in the otter at that point is $60. Everybody follow me. Same thing with stock. If I buy a stock for $100 goat meat and goat soup, same thing as stock. If I buy stock at $60, that's my basis in the stock. So I sell it for $70. I have made $10. I got $10 in the old pocket profit. All right. Here's what I think that you're missing. At that point, once I sell my goat, he's gone. So my basis, yeah, got to pay taxes. That's true. My basis in old goat or otter here is 0. So I made $10 and I don't have a basis in it anymore. It's not something I own. It's gone. So I buy it back for $80. What is my basis in the goat now?
$80.
$80. So my basis is now $80 and I sell it again for $90. So I made another $10. I have made $20. and my basis reverts to zero. So how much did he make? He made $20. And it's the same thing with stock. Nick brought up that, hey, wouldn't it be different for stock? It's the same thing for stock. If I buy stock for $60, I sell it for 70. My basis was 60, but since I sold it, I no longer have a basis in the stock. I no longer have a cost basis in that asset. That asset's gone. Then he buys it back for $80. So now my basis reverts to 80. Now, here's what could throw a loop in the whole thing. A man owns 1,000 shares of stock, and his basis is $50 for the 1,000 shares. Then he buys an additional share for $60. So now he's got 1,001 shares at a basis of whatever 1,000 times 50 is, $50,000, $50,060 divided by 1,001. So his basis has gone up slightly. Then if he sells one for 70, so you got to work it out, but we're assuming that old boy's just got the one goat. If it were stock with multiple shares, I could see that the basis changes, slightly for the whole thing. But in this little simple problem, the profit the man made was 20. Okay, very, very, very good. Any questions about that? All right. Has everybody finished the Collins book? You're finished with the Collins book. Everybody good with that? Is everybody good with your exam that's due on, March 5th or March 6th? Now, the easiest way for you to do the exam is to go to that ChatGPT thing and to type in, some dude told me about options and stocks and basis and goats and blah, 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 blah. Write me a 1,200 word paragraph, response on what I learned during the course. I mean, you could do that, but don't do that. Don't do that. Well, it may be fun to do that and just to see what the ChatGPT thing does. Has anyone played with that, by the way? You not played with it? You know what I'm talking about? Okay. Just do a little Google search for ChatGPT. I think it's GPT. ChatGPT. And go in there and, it will basically, I don't know, it's strange. Go in there. If you were to type this, a man buys a goat for $60, it would probably come out and give you the answer. Now, would its answer be right or incorrect? It's artificial intelligence, and it's really weird. So your exam is to tell us what you've learned in the course so far. So just do that. Okay, good. Let's look at the simple path to wealth. Health savings accounts, more than just a way to pay your medical bills. Katie, what's your opinion of what he said on health savings accounts?
I love them.
You love them?
He was saying, if you can afford to pay for the expense, don't access the health savings. And just let it sit there and build up and build up and build up. But I also think, if you need to access it, which that's what it's there for. I just appreciate that I'm not having to pay with after-tax dollars for health.
Yeah. Okay.
Situations.
Good. All right. What about the case study, putting the simple path to wealth into action? I don't remember exactly what he was talking about there, but I think he was talking about various scenarios of putting this into action. Katie, since you're already in the industry, does anything in this book, you probably got your firm has certain things that they believe in, but has it changed anything in the way that you're going to do business at all? I'm just because it certainly doesn't have to. I'm just curious as to someone who's actually in the industry, what's your thoughts about what Collins was saying?
I think that as far as I've gotten in the book by Bogle, that's been more changing for me than Collins.
Okay.
And I wrote about that in one of my poster things I had to do for the class. But for this one, there are times that I want to be able to, I have a client that wants to take on more risk. And I think we've talked about this where I want to be able to say, let's take the risk and let's let it pay off. But when you work for a firm, you have to CYA. And so getting away from that, that's the problem where I cannot implement all the changes I want to.
Okay, gotcha. So there's certain things that you can't do because you're at a firm, right? What did you think why he doesn't like investment advisors? Now, he's not talking personally about you. He's not saying, but why does he not like investment advisors?
And I'm sorry to be rude, I'm sitting here eating my lunch, but I think that we have to look at the way that investment advisors structure their businesses. And when I came in 3 years ago, I bought a part of a book from an advisor who'd been in the business for 3 decades. And the way that he ran his business and the way that I run mine are totally different. And I talked to another younger advisor this morning, and he said the same thing about one of the guys he works with. And it's that the job that advisors did 20 and 30 years ago was give our clients access to the market. And the internet has done that now. So if you're using an advisor to give you access to the market, then you're paying too much. And I agree with that. And that's where I tell my clients too, my value to you is like 10% of that investment selection. My value has to come in preventing you from jumping off the ledge when you want to. My value has to come through transitioning your assets. So the industry is moving more towards, the way I see it, moving more towards financial planning. That's why I'm here to do CFP work. So if you have an advisor who looks at things that way, I don't agree. But if you've got a stockbroker, I agree.
So it's kind of like me, right? And I've brought this up before. I know how to lose weight and I know how to be healthy. That doesn't mean that I've always done that. So my personal trainer, could I do what I'm accomplishing without my personal trainer? Yeah. I could fire her tomorrow and do the stuff that she's shown me to do in the last year. But at the same time, I have been more successful with my personal trainer. Why?
I think part of it's accountability. Part of it's that you've got somebody there that's motivating you to do what you know is right. So whether it's get you going or hold you back, that's the value.
Hey, there's Jawan. We were missing you.
My apologies. I was in a webinar right before this for work, so I'm here
Well,
now.
we're glad to have you here. Yeah, listen, there's something about being held accountable. Do you know how embarrassing it is to go and to realize that, hey, I've eaten like a hog this week and I'm going to gain 20 pounds, and to stand before my trainer on that scale and hop up there and gain that weight? I mean, it's kind of, I need to be held accountable. I'm an adult. I'm a grown ass man, so to speak. But I could easily, I could do the things. I know the things that I need to do. Doesn't mean that I'm always going to do it. And I think that's what Joe Q Public out there is. And that's why I think that you guys, as financial planners, even though this is simple, and that a lot of planners and investment advisors complicate that which is meant to be simple, overcomplicate that which is meant to be simple. The simple part of losing weight is to burn more calories than you take in. It's simple. And people say anybody can do that. And it's not the case. It's not the case. So I don't want anyone to read this book or the Bogle book and think that people are trying to say that you don't provide worth to your clients. If you will hold their hand, but at the same time firmly hold them accountable, of course, they could fire you at any moment. But I think they will appreciate you making that which many complicate simple and providing accountability to them. Anybody disagree with that or have any comments on that at all? All right. So Katie got more out of the Bogle book, wherever we are in that book. I'm a little behind in my reading. I've read it before, but I read things with y'all again each time. So Jack Bogle and the bashing of index funds. Why do index funds get bashed? Why would people ever go, oh man, putting your money in the S&P 500 or in the VTSAX? Why would you do that? Or VOO, which is the S&P 500 Vanguard fund. Why would you ever do that?
To do that because it gives you the opportunity to invest in the overall the entire stock market, or roughly the, from market cap, the largest 500 businesses that exist, which I believe, if I remember correctly, make up roughly around 80% of the total market encompassing.
But why would someone bash doing that? Why would someone say, well, that's stupid to put your money in the S&P 500, or it's stupid to put your money in the total stock market, or to put your money in a global market fund? Why would people say that that's a stupid thing to do, or that's an idiotic thing to put your money in index funds?
Is it because a lot of times people think that they can structure a portfolio to beat the market themselves?
Yeah. And the problem is, in part 3, Magic Beans, chapter 25, he basically showed you can't pick winning stocks. He said he can't do it and we can't either. I bought, most of you are not old enough to remember this, I bought Value Jet back when Value Jet was in business, and the next thing you know, one of their planes crashes in Florida and kills tons of people. Boy, was I a great stock picker. You just can't. Picking winning stocks is not something that we can do. Now, a lot of people will say, well, Warren Buffett did. Do you know the secret of Warren Buffett's success is not his ability to pick stocks? His thing is he's 90, 2 years old and started when he was 16. That's why Warren Buffett's successful. He's just been at it longer than most people. Because most of us, in our 20s, we were just going to the parties and the nightlife. In our 30s, we might have settled down a bit, and then we had to pay to keep up with the Joneses. In our 40s, we were like, oh, crap, I need to get started, but I can't because my kid is going to start into college, and I got to help them pay that. And then by your 50s, you're like, man, I am screwed. Most people didn't do what Warren Buffett did as a child and start saving and start investing. That's the power of a Warren Buffett, not necessarily that he's a great stock picker. Now, he's picked a lot of doozies that have not worked, but over time, he's picked good quality stocks. Now, Collins goes on to say that he doesn't like dollar cost averaging. Who knows what dollar cost averaging is? We've got to make sure we know what that is. Yeah, Katie, tell us about dollar cost averaging.
What you do with your 401k. Money comes in every month, regardless of if the market's up or down, and you're just set to it automatically.
Yeah. Now, I like that. I love dollar cost averaging. But I think what Collins is telling us here is, let's say your mama dies and mama leaves you $100,000. What do? Do you go, I'm going to put 1,000 in for the next, 100 weeks, keep cash on the side, or do you put the entire 100,000 into your S&P 500 or your total stock fund, American stock fund, or your total global fund? So I think that depends on your age, your situation, what you want to do. But if you're 20 years old or you're 25 years old and you inherit $100,000, Katie, are you going to dollar cost average them, or are you going to put them all in? No, huh?
I'm going all in.
Yeah, I think you go all in,
Considering
particularly.
I have no need for that money anytime soon.
Exactly. I would go all in. Now, if you're 80 years old and you come into $100,000, that's an entirely different story. I think everybody knows that. So, going back to why he doesn't like investment advisors. And investment is different for different people. My mother is 78 years old, and she's still working 3 days a week. You know, she doesn't ever want to retire. She just loves working. So she goes to work 3 days a week. Does she have different needs than somebody that's in their 20s? Absolutely. And does she want to have market returns? Does she want to match the S&P 500? No. What is she in? She's in the preservation mode. She's in the, hey, I'm distributing it to myself, preserving my wealth to live on mode. She is not in the accumulation mode. Most of what we've been talking about so far is the accumulation mode. Most of you are in the accumulation stage. Most of you are accumulating your wealth. So that's entirely different than when you get to the preservation stage. And then some people are actually past the preservation stage. They're at the distribution stage. How do I distribute my estate, my wealth? How do I plan to distribute it both while I'm living and in my death? Right. So that's a high class problem to have. All right. So if someone inherited $100,000, I would probably say, if you're 20, 25 years old, let's go, baby. Put it in the S&P 500, all of it today. Let's don't dollar cost average. Someone's much older than that, that's probably not the same advice that we would give them. And particularly after the year we had in 2022, where the S&P 500, the market was down like what, 16%? It's a great time to go into the S&P 500. All right. I showed you all how to be a stock market guru. I told you how to use probabilities, but he had a section called How to Be a Stock Market Guru and Get on CNBC. If you want, I was quoted in the New York Times once last year. I thought that was kind of cool. But of course, they hadn't called me back on anything. What gets you on TV and what gets you on in the New York Times? If you're making comments about the economy, what is it that gets you on? Do they want someone that says, oh yeah, the market's
Fear.
yeah, fear. They want somebody to come on who will scare the devil out of you. Oh, listen, we've got a crash coming. Oh, really? You really think that? Well, tell me why you think that. We want that person on TV, because that person, you know, if it bleeds, it leads. You know, that's the kind of stuff. So to be a stock market guru, get on CNBC, anybody can do or even sometimes the exciting stuff could make you a stock market guru, right? This thing is going to double this stock's going to double in the next 3 weeks. Yeah, whatever. And please, y'all, never get your financial advice from a TikToker, right? Everybody on TikTok, I was at the beach this last week and they were talking about TikTok videos. On, oh my God, you gotta be kidding. All right, you too can be conned. What's he talking about here? You too can be conned. I don't remember much about that chapter. Anybody remember?
Basically, if it's too good to be true, it is. And
Yeah.
if you're that little old lady that thinks that they know what they're doing and it's not a con, you're already conned.
You all heard of Bernie Madoff. All Bernie Madoff did was make every investor 1% a month, like clockwork. 1% this month. It may be 1.2 the next month. It may be 0.8 the next month, but he consistently made everyone 1%. And people would say, Bernie, how are you doing this? And he would say, well, if you have to know, maybe I should just return my money to you. No. No. You keep on getting me my 1%. Anybody can be conned, y'all. Even us, right, can be conned. Something sounds too good to be true, it probably is. If someone does not produce losing months, well, that person's probably a con artist. Good. All right. Withdrawal rates. How much can I spend anyway? Katie, if you're talking to people about withdrawing their money and they're in that, preservation stage, do people normally
I like,
overestimate?
this one talked about,
Yeah.
this one talked about 4%.
Mhm.
And that's what we've always said, but I liked seeing where that came from so that I can tell clients, this is not just a number that we threw out there. This isn't just because we're aiming for 4% return, but here are the reasons why. I appreciated that. But I do have some that'll say, well, I really need to take this or that. And then I got off the phone today with one of my larger clients and she's like, well, Katie, we're doing this and that. And they're not taking but like 2%. And it was so nice to be able to tell her, like, y'all need to take money for what you're telling me is going on in your life. Like, please take it because they've done what they're supposed to. And I think that was so enjoyable for me because I don't get to tell a lot of people that.
Good. Oh, and I bet, what did they do? Did they take your advice? Did they start going, okay, we'll spend a little bit?
Not
Well,
yet. No.
it's
They-
hard. And
there's-
it's,
And like they need a shower for mobility reasons. They're getting older. And I just said, like, please do that now so that when you really wish that you would have, it's already done. So it's going to be me staying on them to do it.
oh, that's awesome. Oh, Katie, share what you did with your son. I love this.
Oh, my son is in debt.
Listen to this, y'all. Katie is, boy, this lady, she is hardcore, boy. Listen to what she did
I'm
to her kid.
ruthless. My son and I were coming home from my parents' house in North Alabama. So that's my baby.
Oh,
And he's 6. So we went to Buc-ee's and Rhett he had $100 he got for his birthday from his grandmother. And he got this in November. And he told me that he was going to give $20 to the missionaries back in January, which you don't know this backstory. He'd give $20 to the missionaries at our mission conference. And I said, well, I'll match
wonderful.
that. So
Wonderful.
he gave $20 and he walked up to each missionary, like with his ones. And he's like, here's 5 ones for you and $5 bill for you. So it was so sweet. And so I've got that. He's got it figured out. And so we go to Buc-ee's and he said, Mom, he spent $50 on a Hot Wheels. And then he says, Mom, I got some money left. I'm going to spend it. And I said, okay. So he ends up spending the rest of his money and he bought a little 18-wheeler toy. And then he decided he wanted a Warmie, one of those like stuffed animals you can stick in the microwave because his brother has one. So he wants one too. And I said, well, you don't have enough money for that, but if you want to, I will let you use some of my money, but you're going to have to pay me back. And he says, okay. And I said, that's called debt. And he said, all right, so I'm in debt. And I said, yeah, you're in debt. And he says, by $14. I said, yes. So he talks about it on the way home and he tells his dad, I'm in debt. I owe Mom $14. Dad says, well, you owe us $14. I was like, yep, you're right. And he said, Mama, how does somebody get out of debt? And I said, well, there's 2 ways, really. You can sell something. So you get out of debt by providing a product to the market, or you get out of debt by doing something and servicing. So do you want to go pick up sticks? Do you want to pick up chores? What do you want to do? And he says, well, I'll go home and I'll sell some toys. And I said, all right, so pick up your toys. And he comes to me and he says, how do I sell them? I said, well, I'll put them on Facebook and I'll sell them for you. And I won't charge you a commission this time. And he's like, what is that? And I said, that's the next lesson. So he's made $6 so far on his toys and he owes us $8 and he's kind of slacked off, but he said something the other day about spending money. I said, you are in debt, so you cannot spend any more.
Hey,
until you pay
Katie,
off.
it sounds like since he slacked off, it's time to teach him about repossession.
I should,
You know,
but it's been a week, so I can't,
Okay. Okay.
but yeah.
I just
so he
love
knows
that
about
story.
debt now.
And she's not
Thank
even
you.
charging him interest either, you know?
No,
She
I'm
could've
not
been-
charging interest right now. One concept at a time
Yeah, that's great. That's
for
great.
a 6-year-old.
So that's great. So anyone got any questions about the 4%? How they kind of talk about that as being kind of an industry standard? That's a high class problem, right? Pulling out the 4%. That's great. All right. Social Security, how secure and when to take it. You know, he talked about, if you're over 55, you're probably good. If you're under 55, who knows? Who knows about Social Security? I think they'll do whatever that needs to be there. But I just want you to think about, as we're talking about Social Security for a minute. Can you imagine? Can you imagine what would happen if for every child, instead of Social Security and putting it into the Social Security Trust Fund, they would put it in a total stock fund or a S&P 500 fund and invest that? Can you imagine the wealth that would be created in this country? Now, if we did that for everybody, we might have rapid inflation, right? Since everybody would be wealthy, and everybody, when they eventually do get their money, they would, spend it. They've never had it before. But I just started thinking about, wow, can you imagine? And not even give them stock options, to where you can go, man, I could put it in Tesla, I could put it in this. I mean, nothing that could go bankrupt. But if some way, somehow, we could have even that, what amount would it save the government if every child born in the country had $1,000 put in the S&P 500 at birth? Can you imagine? Can you imagine what that would be? Let's look at it for a minute. Let's go on to, I'll look at that. All right, how to give like a billionaire. Any comments on Social Security before we finish that? Katie, how are your clients with Social Security? And, everybody's like, yeah, it's going to be there. It's not going to be there. Any worries out there in the
It
industry?
doesn't matter if they're taking it now or if they're my age. They say, oh, it could dry up any minute, because everybody's heard that, was it in the book? The 2033 number, was that in the book? But Social Security is set to run out. I'm like, look, it's going to be fixed. And I was like, just keep relying on people like me. As long as I'm sitting here serving you and we're talking about this and you're paying me and I'm paying taxes, you're getting paid. I said, oh, okay. It's like, and then I mean, I've told y'all where I am in Mayberry. So I've told them too, if they decide to cut out Social Security and I've put a lot of my money into that, don't you think that there's going to be some sort of uprising? So some way, somehow, they're going to band-aid this. So don't you worry about that. Just make sure you vote if you want to complain.
Check this out. This is a great, our friend Ed. Is Ed in here today? I don't think Ed's in here. But my friend Ed showed me this at investor.gov, this website. The best compound interest calculator I found. Look, I just wanted to show you. Can you imagine you take $1,000 when a kid is 0? No more contributions at all. And let's say that you say, okay, we're going to fund your retirement, for 65 years, just with $1,000 at birth. So you got 65 years in here. And, I don't know, 10%, kind of the S&P over the years, who knows? It could be a little less. I guess I could do an interest rate variable here too, if it's 8 to 12, something like that. Let's recalculate it with a 2 variable. Let's see what it looks like. Initial investment, 1,000. Monthly contribution is 0. Length of time, 65. And I know everybody says, oh, 65. Yeah, like we're ever going to keep something that long. It messed up when I did that, but let's just calculate here. Look at that, y'all. $490,000. You're talking about $500,000. All right, so let's see if we do have a 2% variable, and we'll go down to 8% to 12%. Let's calculate that, see what it looks like. Okay, so big variable, right? Look at this. If 490 would be this, but look, if you got the 12%, that's $1.5 million. Okay, so you got 8%. Okay, you're at 148,000. Okay, that's the variance below. But I mean, it's just incredible. Why do they not teach this in school? Were y'all taught this in high school? Were you taught this by your parents? Why is this not taught? Anyone got any ideas why this is not taught?
Well, if you keep the masses uneducated.
That's true. You keep them uneducated, but you guys are not uneducated. You are educated. You have a child at birth, and everybody has these little showers where they get the garbage that they bring to you that you don't ever use, that you think you're going to use. Like we got, Beth had to have it on her list when we got Abby. Oh, we had to have that little diaper genie because we're going to take the diapers and put it in the diaper genie. We put them in a Dollar General bag and took them outside in the garbage. You don't use a diaper genie. Can you imagine if the new norm was this? Hey, instead of giving me something for the baby, y'all give me $25 and we're going to put it in an S&P 500 or a total stock fund. And we're going to put this in a trust that they'll get when they're 65 years old, so that hopefully they'll have $500,000. Can you imagine doing that? Can you imagine if the government did this for every citizen? Can you imagine the money that could be saved? But the problem is the government would want to get their hands on the 490,000 prior to it becoming the 490,000, another 1.5 million, right? The government would want to, we could solve poverty in America if we could do some very simple things. Have I brought up the thing that Jesus said? Jesus said, hey, I'm not going to be with you guys very long. But what did he say about the poor?
They always will be.
They always going to be. There is no government program out there, y'all, that will eliminate poverty. There's just not. You're always going to have it. Someone on Facebook the other day said, oh man, the guy that stands outside of Publix all the time, he's got a urine bag attached to him and he's begging every day. Is there something that can't be done? Y'all, you're going to have those people everywhere. You just can't rid it. I wish we could, but you just can't rid poverty. But you, ladies and gentlemen, have an opportunity to potentially change your family tree by doing something really, really simple. Simple like putting $1,000 or $2,000. Can you imagine if we did $2,000? Let's look at $2,000. You know what it's going to do? You know, all the family, we're going to give our kid, we're going to bless our kid with a money tree here. And, you know, you're doing the 980,000. Or if we did the thing, the variance above is $1.7 million. I mean, so you're going to be somewhere probably in here in this range, right? Just incredible what could happen. And this is without them doing that. Now, can you imagine if, let's say that they started putting in $25 a month, and let's say that that includes the amount that they're going to put in once they start working and all of this, okay? And let's say that it's just $25 a month. Let's recalculate that for the entire time. $2.4 million with just $25 a month over that time, and potentially as high as $7.1 million. I mean, you're talking real money here. All right. Kaylin says in 5th grade, we learned how to track stocks via the newspaper. But after that, real world situations went out the window. Math classes turned into how complex can we make these algebra calculus equations? Why is this not being taught in high schools? Katie, did you show them the power of compound interest when you spoke to the school the other day? Did you kind of talk about that at all?
A little bit. I didn't have all the fancy projectors and stuff.
Okay.
But I was able to tell them this is the basic, because I've got a sheet that tells them how much you would need to be a millionaire at, oh gosh, I don't have it with me, but how much you would need to put into the market every year starting at age 22. I mean, every month starting at age 22 to have $1 million by age 65. And then you flip that page over and it shows you the struggle that you have ahead of you if you just wait 3 years. If you take that and then you wait 3 years from that, and how different that can be. 2 of them, I think, out of the 18 I talked to.
2 of them.
2.
Yeah, when I was talking to this group, most people were just bored as all get out. There was one guy who was taking notes though. And I said, man, you are going to set it on fire. So what Katie's talking about at this same website, let me, did everybody get this website? Let me share it in chat so you can copy it and make sure you get here. Let's see, chat. Here's chat. All right. So you want to be a millionaire, right? 5.6, 1.6. All right, Katie, let's do this is a great website you can go to too. What amount are we starting with? 0? What number you want to start with? I can't hear you, Katie. Hit your space bar or something.
Start with 0, because
Okay,
no,
well-
let's just assume nobody has anything.
Okay, so you're saying from 20 to 65, so like 45 years?
45 years,
Okay, what estimated return we're gonna give them? You think we can give them 8 or 10?
9.
9, let's do 9. We'll split the baby. Okay, compounded frequency. Okay. So initial investment, savings goes $1 million. Initial investment, growth over time, 45 years. Best rate, let's calculate and see how this thing goes.
Well, we have to have something above 0, so, because it doesn't have the monthly option to put money in monthly, right?
Oh, it doesn't, right? Yeah, let's see.
Do 5,000,
5,000?
yeah.
Okay, 5,000. Here's grow 45, rich rate there. Let's see what this says. Okay, so there we go. So the results are in. If you contribute $120 every month over the next 45 years towards your goal, you will have $1 million in savings. This, ladies and gentlemen, is what you've got to show your children. This is what you have to show your children's friends. This is what you have to show your nieces and nephews and grandchildren. This is what you must show them. $120.18. Now I know what they're thinking. Guys, I don't have $120.18. What do you have? Can you live on 70% and can you do something dramatic with the 30%? Can you live on the 50% and do something dramatic with the other 50%? This is where we're talking about. This is where the real wealth will be created. And time is the biggest thing. They don't want to do this when they're young because they want to go to the parties and they want to impress their friends and they want to have the Nikes and they want to have all the nice stuff. How can we do a better job of persuading those who live in a microwave world, who want everything now? How can we do a better job of making delayed gratification look sexier or look more attractive? What is it that we can do, y'all? I'm open to your suggestions.
We potentially find like set various targets, and within those targets, once we hit that goal, like let's say we hit 5,000, like find or have some kind of reward, for example, as you hit those various metrics and savings. So that way you are, maybe even if it's not financially rewarding yourself, but you're rewarding yourself with, pizza party, or I get to take myself out to a great restaurant that I love, or, hit 25K. Great. I want to take a trip for myself. Or, that way you're incentivizing saving so that way you actually be able to achieve the savings that you so desire.
Okay, good. Yeah.
We
So
have one of the teachers, I didn't get to talk to his class, but he is the lineman. So at this tech school that I went to, they have a lineman's course, which I love. They've got this lineman's course, and the lineman teacher does Financial Fridays. And he actually had kids come in, and they are tracking over the course of the year, which, he understands the course of a year that's shy, and it could show them, hey, you're down. But he's got his ways of how he's planning to cope with what they do. But they've each picked, and they're tracking their own something, whatever investment it may be, and he's showing them, like, making it real course, kind of like we're doing with this paper money. But I think part of it is giving children, and it's hard because you've already got a broken society where the adults who are responsible for the children don't know this. The parents don't know this. I think part of, like, I love The Greatest Generation, but they didn't talk about money. And that's what I see with my clients right now is my parents didn't talk about money. So I struggle with it. And I said, well, did you talk to your kids about it? Well, I tried, but we got this broken society now. And so if we could fix it to a point where the parents at least gave the kids the protection to make choices and experience the ups and downs while they're home, whether it's real or not, you know, that could be life altering. And it's okay if we don't get it right. We have so much pressure on us as parents to like, you have to be perfect about this. And you don't. Just get your kids in front of either you and you learn it with them, or you get them in front of somebody who will teach them.
Yeah, and I think there's a lot of guilt out there, right? That if you were to show this to a 35-year-old parent, you know, and their kid is 14, you know, they're going to be like, oh man, I missed the boat. And so rather than starting now, they'll just say, well, I missed it. You know, oh well. It's hard to realize, but you know, even for those of you who are trying to make a change in your investment strategy, don't wait until the end of the course. I want you to make your change today. I want you to make sure that you've got your, you know, coming out of your check account every week or every 2 weeks going into savings. Well, Bobby, I can't do it. Can you do $5? Can you add to it? I want you to, at this point today, to start this process. The biggest thing that made Warren Buffett the wealthy man that he is not his investment savvy. It is his dedication to investment and the time that he has been an investor. So whatever it is, well, I'm going to wait until I get out of school because school's taking up all my resources now. I'm telling you, don't wait, because that wait will then be 1 year and 2 years and 3 years and 5 years. And what we're trying to show is this: it's little gains here in the initial 1, 2, 3, 4 years that make for the big gains here. Because look, the initial investment compounded is this. The total savings is this, right? I mean, that's the total is more than what you put in. This is the growth. This is the growth above and beyond what was contributed. You got to start today. So what I want to say to you, and I know we don't talk about our money. We don't talk about our money. I got it. But for those of you who have been putting it off and say, okay, I'm going to do that after this semester. I'm going to do it after. No. Do it now. Go ahead, set your Vanguard account up today. Send $25 in today. Every time you get a paycheck, send it in then. Make sure you do the auto draft from your checking account. Do it today. Just like my daughter. She's 18. We put every dime into VOO, the S&P 500. I said, Abby, ride it until you retire. We're in a Roth IRA. You'll never pay taxes on it. Let this puppy mature. When you get married and you have a kid and you're like, oh man, I've got $50,000 from this that dad's made me put in VOO. I'm going to take that out and I'm going to buy a minivan, a brand new minivan. I said, Abby, if I am alive, I will beat you over your head. I will run over you with the minivan. If I am dead, I will come back. I will haunt you. Don't you do that. I said, this is for your retirement. And so it's kind of fun that she gets on and she'll log in. She says, hey, Dad, I've made, X amount of dollars. I said, and what did you do to do that? All you did was your dedication to the process. It wasn't that you did anything other than put your money in. Allow it to compound, allow it to grow. Any final comments on this at all, on the compounding effect? God, it's important, y'all. It's really, really important. All right. How to give like a billionaire. I loved what he did. Does anybody remember what he did as far as how to give like a billionaire? What did he do? He set his own nonprofit up. He set his own nonprofit corporation up. And then anytime he gets somebody coming by him and says, hey, we need money for this, what does he say? Send a request letter to my nonprofit. He gets to tell people no all the time. That's the great thing about it. So send a letter to my nonprofit. All right. So the afterword, my path for my kid, the first 10 years, Tales from South Pacific, some final thoughts on risk. Final thoughts on risk of this. Tom Sosnoff is going to talk to us about risk. He has not been successful in every endeavor, but he has been successful in 2 endeavors that have created 2 separate enterprises that are worth over $1 billion. He will be with us Thursday. Juan, you didn't hear this, but if you will be live for that Thursday class, it starts at 1 Central Time. So it's a little bit different in time. Instead of our 12:30 time, it starts at 1. It'll go for about an hour. If you're in the class live, you get 10 extra points. Any friend or family member that you bring into the class to observe and to be a guest, you get 5 extra points for them, and you get 10 extra points for sending Tom a thank you note after the class is over. Any questions on that at all? And it's a separate Zoom link that I will email out to everybody, either tonight or in the morning. Any questions at all?
I have a quick question.
Hey, Juan, yeah.
Yeah, so I am in a rotational program where one of the tracks that we have the option to go to is the investment track.
Yeah.
And I extended the offer to attend this lecture to all of my entire rotational class, which is about 25 people. So I just wanted to make sure that that is okay and that
Absolutely.
the extra heads that will be popping in is
Absolutely. I'd love to have them all here. That'd be great. That'd be really,
Okay.
really great. Yeah,
I
as
think
many
about
people-
20 accepted my invitation, so.
Yeah, that's wonderful. And I love that, right? That you're like willing to share that with other people, because I mean, how often is it that you get to talk to somebody that's created an enterprise like that and ask him, business questions? And Tom's just as friendly as everything. So y'all bring your questions, ask him questions. So it's good. Let's see. Kaylin says, I recently found this app. It reminds me of Duolingo, but it's mini lessons for kids on finance. They can earn points and trade them in for $5 gift cards. Oh, cool. To stores that kids generally like shopping at. It's called Zogo. Very cool. I'll have to look at that. Let me write that down. Zogo.
I was going to share something with y'all too that I've noticed has happened since I've been reading the Jack Bogle book. And I knew this, but it just wasn't anything that I'd thought about. But it's 1 o'clock, Nick. Anyhow, the Dow Jones 30 companies, the S&P 500, we know this. But I started telling my clients, I was like, do you know how many companies the Dow Jones tracks? And they're like, I don't know, 1,000, 500. They have no clue. I'm like, it's 30. And they're like, what? And then, of course, I can joke and go through, like, I worked for Amgen, and Amgen's on the Dow, and if they create a drug and it just completely bombs and kills everybody, the Dow's going to drop just because Amgen's there. But what if the other company that I work for is doing really well? It's not gonna show. And I said, well, what about NASDAQ? Do you know what they do? And they're like, no. Okay. Well, what about the S&P? And they're like, I don't know. And it's like, it's right there, 500. And so I've been able to start showing with them, hey, the Dow is going to have bigger drops. That's why the news is picking it up. Please stop listening. And that, I have noticed, has put a lot of people to ease. And they're like, why did we never hear this from the last advisor? And I was like, I don't know. Because it's very basic to us. So we don't think we need to pass it along to you. But if it's going to keep your mind steady, why do you not need to know?
Yeah, exactly. And it kills me when I listen, I'm on the radio or I'm listening and they quote that stupid Dow number. And I go, it's so irrelevant. It's 30 stupid companies. And you're exactly right. They do it because they can say, wow, the Dow's down 900 points. It's 30 lousy companies. Quit listening to the Dow. And then it really pisses me off when they don't give out the S&P 500 numbers. I'm like, are you kidding? That's what really matters. Anyway, that's a great comment. Any other comments? Yeah, Nick, it's going to be at 1 Central Time, 2 Eastern on Thursday. All right, any other comments or questions? All right, roll tide, y'all. I'll see y'all Thursday. Bye-bye.